Digital Currency Group and its bankrupt Genesis subsidiaries reaching an in-principle agreement on terms of a restructuring plan with a group of the firm's key creditors. The term sheet also involves refinancing the outstanding loans where DCG borrowed $500 million. As part of the agreement, Gemini will contribute up to $100 million in additional funds to earn users. Grayscale, Genesis, and CoinDesk share the same parent company, DCG. Joining us now to discuss is CoinDesk Global Policy and Regulation Managing Editor Nick Day, who's also the editor of CoinDesk's The State of Crypto newsletter. So, Nick, can you break it down for us? What happened yesterday?
Hey, good morning. Yeah, as you said, the Genesis announced that it had reached an in-principle agreement, and they might file as soon as today the documents about this, but they reached this agreement with DCG, of course, but also with Gemini and with at least two groups of ad hoc creditors. So what the attorneys for Genesis described as, individuals and entities representing, I think, over 2 billion worth of claims. Under the terms of the agreement, DCG will actually sell off not just Genesis Global Holdco, which is the specific entity that filed for bankruptcy, but also it will give up its equity or sell its equity in Genesis Global Trading, which is another Genesis entity that is not bankrupt. The attorney for Genesis said that he believes this means that the sale will be a more attractive package than if they were just trying to sell off Genesis Holdco. So, the implication sure seems to be that they're going to just sell off the entire, this entire Genesis package and hope that they can recoup enough to send, funds back to creditors by, through this way. We're also, as you mentioned, they're going to try and restructure some of the existing deals, issue some stock, and try and get that listed or, meet a certain number of other criteria. Final details still being worked out on that. But all of this suggests that, there's an interest in resolving this sooner than later. And, the fact that they had an agreement within a month of filing for bankruptcy suggests that things are moving apace.
Nick, is there any speculation out there about what kind of buyers these would be, or even like what type? I mean, are people even talking about that yet, or is that not even? Is that just too speculative?
They're not talking about in the courtroom, at least. I'm sure there's probably going to be a lot of speculation on Twitter, and I imagine that all the entities involved are already involved, or already busy trying to figure out how to structure the sale and how to get that through. But they haven't said anything to the court yet about that. They just said, they came up with this agreement yesterday. The hearing itself was actually postponed by a couple hours, so it suggests that this is all happening, very quickly.
Nick, can you give a quick breakdown as well as how Gemini, Genesis, and DCG are intertwined and partnered in these deals?
Yeah, so Gemini, because they're the kind of outside party, Gemini was working with Genesis on its earn product, basically using Genesis as a custodian and as a party that can handle the funds for the loan product, or the earn product, excuse me. Genesis, of course, is a subsidiary of DCG and normally operates completely independently. All subsidiaries do, I think. We can certainly say that CoinDesk operates independently, so as an example. But what happened was Genesis had some bad deals. Our CoinDesk colleagues have reported in the past year that Genesis lost a lot of money on 3 Arrows Capital and FTX, of course. So what looks like happened is DCG basically took on those debts that Genesis had, to try and spare Genesis from having to file for bankruptcy and reassure investors and customers that Genesis was solvent. And it just didn't work out. There was too much going on, and the reassurances from DCG were not sufficient to prevent Genesis from having to file. And again, this is specifically Genesis Global Holdco. It wasn't the entire Genesis subsidiary that filed for bankruptcy. It was just one aspect of it. So, I think the initial thinking when that happened was, okay, well, part of this business is doing poorly, but Genesis Global Trading can still generate revenue, so we can, maybe keep that separate. I guess now the calculus has, if not changed, at least kind of shifted to saying, okay, well, if Genesis Holdco is going to, whatever, they're going to sell it, then they might need the revenue, a revenue generating aspect of it to make it more attractive.